Everyone, and welcome back to the Coco Nomad channel, where I talk about financial and location independence. And if you'd like to follow along with these topics, along with the tips, tricks, and techniques that I provide for helping you make a living and a life, I need you to do two things. Go ahead and smash that like button so that more people can find it. And if you want to subscribe, hit the subscribe button and click that notification bell so you can be informed every time a new video drops. And speaking of new videos, this is another in my investment series where I talk about my journey to financial independence via active investing. So, this is the October investment report. I'm going to share the results of what's happened in my first full month of active investing. So, as I've mentioned previously, I started learning about options trading, and my goal was to sort of change the way that I looked at investing as I'm moving into this new phase from really getting serious about financial independence. And this is a return to investing, but in a different way. Whereas before, I would just buy mutual funds, ETFs, and sometimes individual stocks. But I really was fascinated by options and a different way of doing them. So I decided to stick with a simple strategy. I don't want to get ahead of myself. I don't want to do things that I would consider more risky than I'm willing to get involved with. So it fits within my risk profile. And I just kind of wanted to dispel some of those notions about options trading as a whole being risky. And one of the best things I ever heard is someone said that if you don't, saying that you don't like options is like you saying you don't like sports. It's like there are different sports underneath, this entire umbrella of options trading, and there's different things that you can do, and some of them are a lot more conservative than others. And so I focused on those using a simple strategy. Of course, I'm still buying dividend stocks because I do think that that is a good way to have generate monthly income. And my end goal is probably going to be to have a larger percentage of my portfolio in dividend stocks as I get a bit older, and sort of move away from having the bulk of my portfolio or a larger portion of my portfolio being in an options trading. But for the options trading, I'm only employing two simple strategies. The first one is selling covered calls. And that is where I own 100 shares of stock. I write a contract in which I agree to sell my shares to someone, the buyer, at a certain strike price by a certain expiration date if that price is hit, and they'll pay me the premium. And the idea behind that is I don't think the stock price is going to go above that stock price, that strike price. The buyer does. So we're both on opposite sides of this thing about thinking about what's going to happen. But they're willing to pay a premium because they're going to be able to lock in. They think that price is going to go much higher, and they want to lock in a lower price but not have to buy the shares outright. So basically, they're just sort of like hedging on the rise using my stock and paying me a premium for the right to do so. And the other technique is selling cash secured puts, which is the exact opposite. This is where I don't think a stock is going to go really low. And the buyer, because I'm still selling the option contract to someone that says, basically, I'll take the stock off their hands if it hits a particular low point, a price, again, a strike price by a certain expiration date. And for me, it's a way for me to possibly get the stock if I want it, which is normally what I do. I want that stock. And I've kind of decided a particular price point where to be okay for me to buy it. And with that premium, it's going to make it worth my while. And the other person, the buyer, is basically buying insurance that says, okay, well, I know even if the stock price takes a huge nosedive, and we're going to get into this as this actually happened, taking shares off of their hands at a price and they don't absorb the entire loss. So, like the insurance company, I'm saying, hey, I'll insure your house. If the thing burns down, I'll give you this amount of money to cover the cost to rebuild it. And they just pay the premium. So, let's dive into what has actually happened this month. Well, the first thing is I like to set income targets. I want to have a clear idea of sort of where I'm going and what I want to do. And at the end of last month's investment report, I made a total of $114, I believe was the somewhere in that ballpark. But I wanted to try to see if I could generate $250 in monthly income in investing between the dividends and my options. So we're going to see how that worked out. And here I have these different levels, long-term goals of where I'm trying to achieve. So I achieved level one, which was $100. And I set the goal to go to level two, which is $250. And I set that goal because I wanted to be really conservative. I didn't want to sort of set a goal so high that I start taking more risk than I needed to take. And I also needed to put a little bit more money into deposit, a little more money into my account in order to make a few more trades, to make a few more options trades, and to buy some more dividend stocks if that was the goal. Now, this month, and we're going to share these results, I ended up not actually buying any more dividend stocks. I actually just used the funds to do options trading. So the deposit all went towards the options trades. So when we come back, we'll dive into how I did. Okay, we're back. Let's see how I did this month. So if we look at these results, we'll see that my dividends actually increased over the previous month because I did make some prior purchases at the end of September. So in the month of September, I did make some purchases in more shares of dividend paying stocks, which increased my dividend payout for the month up to $92.19. Now that does include one or two that only pay quarterly. So while I like this number and I'm really happy and I'd like to get this to 100, I'm going to have to continue to buy more shares of dividend paying stocks because some of these stocks only pay every quarter. And I haven't quite lined up the shares or the stocks, or the ETFs and funds that pay where every month I'm getting at least one or two of these that pay on a quarterly basis. So I do have some monthly paying REITs, but those sort of, even though those are continuous, the ones are paying quarterly kind of go in and out. So in the following month, without purchasing some more dividend paying stocks, this number is probably going to go down. But one of the things that I'd like to do in the future is get this at a steady $100. So it's nice to have this $92 number here because it gave me a nice target and I wasn't overly focused on premiums. But let's talk about the premiums because that was where the big gain came from. The previous month, I think I had about maybe 70 some odd dollars or so in premium because I had a total of $114. But this month I went well over that to $1,117 in premium generated. And the way that I did that was by using that same strategy I mentioned, but managing those things and closing out options and opening up other contracts a few times. And so that's the important thing is you have to manage the trade. I think I mentioned in the prior video about the stock drop, which is one of these underlying company stocks that I had options trades on, dropped 70% in one night. It's just the end of the day that some bad news happened. Investors didn't like it and the stock plummeted. Well, what I did was I jumped in and bought a bunch of those shares the next day because I was confident that those share prices were going to go up, and I immediately started selling those covered call contracts against that, as well as selling additional cash secured puts because I didn't think that that price was going to drop again below that lower point. And that's how that ended up working out for me. So basically what that meant is I collected a total of what I mentioned, $1,202.91, which is the combination of the dividends and the premium. So I am ecstatic because I set a goal for level 2 and I immediately achieved level 5, which is a huge jump. I did not expect that. I was expecting to get the 250, maybe 400 based on how things turned out. But I am ecstatic that I was able to hit this goal and really blow past it. So diving into how those particular trades worked out, I just kind of wanted to highlight a couple of the trades. And then the first one is the one that actually didn't go well. And I talked about this before where I own 100 shares of Ford and I sold a covered call against it, and those shares got called away. So even though I collected $14 worth of premium for this, It didn't quite work out the way that I wanted to because I don't think I picked the high enough strike price. Ford stock just started soaring. I mean, this thing is trading at its highest and since the old CEO left, and I knew it was going to go up. I didn't expect it to go up this fast. So, and we're not talking about a lot. I mean, when I started buying these options, they were or selling these options. The price was around $13 and it's gone up to 18. But relatively speaking, that's a huge percentage increase. And I still wish I had these shares, and I'm going to have to do something in order to get those shares back. So I'll probably sell some cash secured puts on Ford and see if that price comes down a bit. So maybe I can get it at a lower sort of average cost per share, lower than the current price. But that depends. I may actually just end up buying 100 shares outright. But it's a lesson learned. Should have simply picked a higher strike price or just waited. But I mean, the whole point of owning these is so that I can run this strategy. So next time I'll just maybe just do a little bit more research and just be a little more optimistic in the price. Now, the second stock is in Uranium Corp, stock symbol UEC. And in this one, this is where I actually successfully use a technique called rolling, where I did select the strike prices that I thought were reasonable. And then I had originally sold 8 contracts at this $3 strike price. And then I successfully cashed out before the expiration date. So they had some value, and I just took the profit. And I've mentioned this before. It's like I'm still wrestling with the percentage point. It's like a general rule. It's like I'd had it set between 50 and 70%. And normally that's when I say when it hits 50, 50, 55%, I'm like, okay, I'm good. I'm going to take this profit, particularly if there's a potential roll into another period, or just roll up and roll down in price, which is what I did here. I rolled the strike price up to 350, and but I can only do 7 contracts then because it was the same amount of collateral. But I rolled the price up and was able to achieve additional $225 in profit. So that's that trade management thing that you have to do if you really want to maximize your ability, maximize your profit. Now, it doesn't require me to watch things like every hour, every day. I'm not a day trader. I'm not sitting here watching, but I do pay attention on a daily basis just to kind of see where things are going. And then if I see it at a certain percentage, and that's when I start to evaluate and say, maybe this is a good time for me to take the profit, lock that in, and then make another move. Which brings me to the big one for this month, and that was Cortexum. And if you want to go into more details, just watch the video. I'll link to the huge 70% drop that this particular stock took. And despite this huge loss overnight, I was able to roll some options down to net most of the profit that you'll see here. And that is where I took a loss on some of the contracts, but in the aggregate, because I was able to just suck that up, take the loss, and then roll into some new contracts as that price was moving and bought new contracts and bought those options, I was still able to make it work for me in the end. And that's again, constantly paying attention, looking at these prices and making a determination. I was really, really conservative on the initial puts that I did. But then when I went and bought those shares and started selling the covered calls, I actually had covered calls at a higher price and then these puts at a lower price at 17 and a half and then 12 and a half, because what I wanted to do was once that price took that major drop, I didn't expect it to really move outside of that because there isn't any new news. That news came out and we're still waiting on the earnings report and we're still waiting on the further reports, more details of that clinical trial that that first information caused that price to have that drastic drop. And so far, I've been correct. The stock price has been trading in between those two ranges. It went up a lot today, but we'll see. I'm just going to watch. And as long as it stays in between those prices with my November options that I have on now, I should still have another profitable month. And so that'll lead me into what do we want to do? Well, before we get to that, I wanted to talk about this new segment here. I follow a couple of other YouTubers, and one in particular talks about their monthly investment and their dividends, and they like to tie it to real world things. It's like, hey, this is a goal for mine. The goal of this income is to pay for things. It's like real bills that I have in life, real goals that I have. And tying it to a real world thing, I think is highly effective. So I've adopted that and I've added that into the monthly investment report. And this section is, what does it pay for? All right. So what did this $1,200 of income from this investment source pay for? And it actually equals 3 months of my health expenses, my insurance, and some of the other things that I do to remain healthy. And it covers those costs, which for me, I think is huge. Like, I'm really, really happy. And I'm hoping that this continues, because if I can have 3 or 4 months of income like at this level, then that covers a year's worth of health expenses for me. And so tying it to something that's real world, that has immense value to me, I think it's kind of helpful for me, and it helps keep me on track. I don't get over my skis and get too risky, but I'm like playing this game the way that I really feel like I should be playing it, right? Making sure that I'm employing strategies that give me the best chance of success and give me these returns, and then I get this real world benefit. So now we can talk about our goals for the next month. And so for next month, I'm still going to focus on the optimum time to open and close trades. I've been doing a lot of studying and a lot of reading and watching other traders talk about managing the time period when you're opening these trades. And they're going to be based on a lot of things: the risk and the volatility of the underlying stock, the time of the month, what kind of news is coming, whether it's dividends coming or earnings coming, how many days out you should do this. Some people really are big fans of weekly options contracts. Some are fans of monthly. Some do both. I haven't really developed my own sort of rule about that. I'm open to them all. I'm just trying because I'm still learning. And we'll see. Maybe I'll always employ them both. Maybe depending on how the market is doing, I'll do one versus the other. And maybe it just depends on the underlying, because some of these stocks and funds don't have weekly options. They only do monthly. So sometimes that is the only choice. But regardless, I'm just going to continue to study and continue to learn and work and learn by doing, to sort of develop my own sort of rules around, or strategy around, when is the optimum time to open and close. And that also includes that percentage. Like, will it always be 50%? Maybe not. Sometimes it may be more profitable to close it out at 33% and then open up a new contract for a different time period to maximize the gains from that one, or to give me a chance for the stock to do what I think it's going to do. And then finally, what level I want to reach. Now, I don't expect another month where I jump up from level 2 to level 5. So I'm just not that kind of, I'm optimistic, but I'm not that optimistic. So I'm looking at one level ahead, which is $1,500. And considering that I was able to generate $1,200 this month, and I will be making some more deposits in the following month, I think $1,500 is a reasonable goal. Now, if I achieve that, I will tie it to something a little bit different, just to kind of mix it up in the what does it pay for, but it's going to be a doozy. If I can hit that one, then it really does hit one of the most important expenses that I have month to month. So that concludes this monthly report. I'm very, very grateful for anyone who's watching, listening, following along. Again, if you want to continue to follow along, hit the subscribe button, hit the notification bell. You'll know the next time these reports come out. We are in the middle of the week where I do put all of my reports out when I talk about all these components of my FIRE journey. So there is a FIRE report coming this week, and there is a monthly income stream report coming this year, where I talk about the different income streams that I have and how they're doing each month and my plans to grow them. So keep following along. As always, I hope you have an amazing day, and I will talk to you next time. Cheers.